Hello, welcome to another video for Fortune and Freedom. I am the editor, Nick Hubble, and I'm joined today by John Butler, our investment director, who just happens to be an American, which is very convenient for today's video because, John, you're going to be taking us through the weird and wonderful world of US elections.
Yes, I'm more than happy to do so. Weird and wonderful is right.
That's right. This gets a bit bizarre. I suppose all electoral systems are a bit bizarre to people from other countries. Having moved around a lot, I don't seem to be able to understand any of them and why anyone would want to set things up the way they do. But the American system really is special. It's also going to have a significant impact on financial markets if it hasn't already, as we're going to get into. So this could really matter to all investors around the world. Let's start, John, with some of the recent news. We've had a bizarre jump in the betting odds of a Donald Trump victory for the presidency. What's going on there, and does it reflect reality?
Well, it certainly might reflect reality. Let's keep in mind that the election betting market in the US used to be very tiny, but there's a lot more money behind it now, lots more participants. So arguably, it's a somewhat more reliable indicator today than it was 15, 20 plus years ago when it sort of started going. And so that is something people are watching. And there's been, as you say, a huge move in recent days away from Kamala's odds in favor of Trump's odds of winning this election. But keep in mind the nature of this risk that's being traded. It's very binary and it's very sensitive. An option trader would call it gamma. That is, the gap widens out even on the slightest movement in the underlying odds because it's very all or nothing, and it hinges on just a handful of so-called swing states. So this is not necessarily, even though it looks like a hugely large and decisive move, it's not necessarily as large and decisive as it appears.
Yeah, one possibility seems to be that a few people place very large bets in favor of Trump, which, of course, requires the bookies to make the corresponding adjustments to the odds. Is it just some betting odds, or are there also changes in polls and the broader betting market? Is there anything outside of betting that implies that the betting markets are not just making some sort of bizarre tangent and error in their odd estimates?
I think you can make the case that there has been a series of, well, from the perspective of the Biden-Harris campaign or the Harris-Walz campaign, there has been a recent series of unfortunate events, things that have clearly gone against them, such as the hurricanes and the response or lack of response thereto. And so you've had some of these, you could argue, gifts to the Trump campaign that have assisted him. You could also argue that perhaps his campaign team have been somewhat more nimble and quick to take advantage of events, whereas Harris and Walz have been a bit more on the back foot, a bit off balance. And so regardless of whether it's a gift or it's very shrewd campaigning, there are some fundamental reasons why perhaps Trump has moved into the lead here. And while, again, it's very much a guessing game because of the complexity, as you mentioned, the complexity of the U.S. electoral system, the fact that a handful of swing states are highly likely to decide it. So one doesn't really know, but it does appear that to the extent that there are tea leaves to read, that those tea leaves are at least somewhat genuine.
And I suppose those people who made those large bets that moved the betting odds are still making bets, right? And they still consider those odds to be good. So maybe they know something that the pollsters and the betting odds companies don't, which is now taken into account. You mentioned a few times the electoral system, the electoral college, the swing state. Take us through, if you dare, in the simplest form, how all of this is going to play out almost certainly with those swing states and with that electoral college on the night.
Well, look, unless you read the Federalist Papers by Hamilton, Jay, and Madison, it's very difficult to understand why the US electoral system was designed the way it was. But believe it or not, it was designed to make it extremely difficult for a demagogue or someone who sought to become a demagogue to win an election. It was meant to divide the country up. It was meant to make the US a very difficult environment for general electioneering. That is, to appeal to everyone easily, everywhere, all the time. And so you're in a situation where you're going to have a typical election cycle typical from the US point of view of modern times. In 2016 and 2020, you saw the traditional blue states go blue very quickly. You saw the traditional red states go red very quickly. And it's only very, very late in the vote counting that you begin to get a clear picture in the swing states. And in 2016, it looked as if Trump was not going to win, or if he was going to win, he was not going to win by a decisive margin until really the last minute. And all of a sudden, a handful of swing states went for Trump. 2020, exactly the opposite. Everything was on course for a typical blue versus red election. And then all of a sudden, late in the night, a handful of swing states that where Trump was apparently in the lead suddenly went the other way. I wouldn't be at all surprised if this election looks similar. That is, everything seems normal, but then all of a sudden there are these swings very, very late in the game that decide it. With one caveat I'm going to say, the gap that has opened up only very recently that you mentioned in this election, we never saw a sudden late swing prior to actual voting in 2016 and 20. That is, you just sort of had these, the polls were fairly stable in 16 and 20. They're not stable this time around. There really has been a large swing late in the campaign. Therefore, there is a chance that, in fact, as we watch election night unfold this time round, Trump moves into the lead and that lead simply continues to increase. That is a possibility. This could result in a landslide. If the betting odds are right, if some of these latest poll results are right, this could actually be the first landslide victory in an American election for many years now.
The question is whether that's going to be enough to have the Democrats accept the result. But let's move on to financial markets. They've certainly been on the move in terms of the US government bond market. I understand there's been some stock moves based on the changes in the likelihood of Trump winning, the perceived changes at least. So does this give us a hint about how markets might react to a Trump victory? Is that Trump victory already priced in, meaning that the only real surprise now for markets would be a Kamala Harris victory instead? And how do you think investors should be playing the election, if at all?
I think there's a reason why markets have behaved the way they have, at least to the extent that politics is influencing them. First of all, while Trump is generally regarded as a significantly more pro-business president than Kamala would be, the fact is he is threatening this tariff policy, which other factors equal would hurt corporate profits. Now, you could say, it will actually not hurt U.S. corporate profits. It will hurt international corporate profits. But the problem with that is that roughly half of the revenues generated by Standard & Poor's 500 listed companies actually come from abroad. And look, the world's globalized. The fact is a tariff is a net negative for global corporate profits. And fine, Trump may use it as a political tool to try and suggest he's supporting U.S. businesses and jobs. And at the margin, perhaps that would be the case. But the idea that that would be broadly market positive, no. In my opinion, a general tariff and the trade war that might kick off, or actually it's already kicked off, but it would escalate the trade war, as it were, globally. In my opinion, that would be a net corporate profit negative. However, nevertheless, on balance, markets regard Trump as a more pro-business candidate than Kamala. And indeed, markets should be concerned that she might try, I think she would fail, but she might try to get through some increase in capital gains taxes or some other anti-investment, anti-business policies. However, the reason why I don't think she would succeed at that is because she's not going to carry the Congress. If she wins, she's not going to retake control of the House of Representatives. At least that's what the polls are showing. And so the idea that some major anti-business, anti-investment tax code changes or whatever would ever get through the Congress, even if Kamala wins, I don't think so. And you could also argue that if Trump tries to push a tariff through the Congress, he might fail in that regard as well. So it's important as we go into this election, if you want to understand how the stock market might react, you need to look at the Congress as well as the presidency. They're both arguably equally important.
Yeah, and that's often forgotten by foreign observers of the election and investors. It's a big part of the US political coverage internally, but over in Europe and Australia and the UK, it's all about the White House, which could end up being very misleading. I went to bed last night reading about how Trump's tariffs were evil and terrible and would have all sorts of disastrous consequences, one of which being the trade war that you mentioned. And I woke up this morning reading about how the EU needs to apply tariffs to China in order to protect its industry from the wave of Chinese green tech, especially, of course, the electric vehicles. It seems to me that the trade war would be very Orwellian. We're at war with East Asia 1 minute and Oceania the next, whatever it is, a pure propaganda effort. When your own side does it, then it's good. And if the enemy does it, then it's bad. That implies that there is a greater risk than usual of the trade war actually escalating. Even if Trump isn't the first one to fire the shot, right? So this isn't just about Trump. This is about that tit for tat escalating quite quickly, and the potential for that to occur is unusually high. What does that mean for stocks? Does it mean you're rotating from one sector of the stock market to the other? Does it mean you're becoming more defensive? Does it mean you're allocating less to stocks, to different parts of the world? How are you reacting?
Well, I'm very defensive in my portfolio right now for a variety of reasons, and the threat of an escalation in the global trade wars is very real. But that's only one of the threats that I'm looking at. I also look at simply the fact that the global economy is teetering on the edge of recession, in my opinion. China might already be in one, and the U.S. is headed into one, in my opinion. A tariff escalation, be it coming from Trump or the EU or anywhere else, would only make that situation worse. Now you've argued, Nick, that Trump is merely threatening these tariffs as a negotiating tactic, and you may well be right. But that sort of brinksmanship doesn't always work out as planned. And indeed, the world could go through a major escalation in the trade wars. The BRICS summit, which is currently underway as we speak, no doubt Trump's threatened tariffs are a topic there. The BRICS would be hugely hurt in principle by an escalation in the global trade wars. So this is on everyone's minds. And as you say, it's on the stock market's mind. And this is where I'm going to give you a very brief history lesson. Lots of people scratch their heads regarding what caused the massive October 1929 stock market crash in the United States, which is the signpost that historians use for when the U.S. Great Depression began. Well, guess what? Did you know that at the end of September 1929, a proposed large general tariff on foreign imports, which had been put through into the Congress by Congressmen Smoot and Hawley, their tariff bill finally managed to get through the Senate committee where it had been stuck for many months. The House had already approved the tariff, but the Senate had not. When it became clear that the Senate was going to vote on it and that the vote might well go in favor of the tariff, days later, the stock market crashes. It is possible that the reason why the stock market crashed in October 1929 was because of a tariff bill moving through the Congress. So don't tell me that the threat of an escalation in the global trade wars couldn't be hugely damaging for global stock markets. It absolutely could be. We have historical precedent for that, and the world is way more globalized today than it was then. Hence, this could be very damaging. So I hope you're right, Nick. I hope you're right. This is merely a negotiating tactic, because if it really comes to it, we could be in for a major global trade war, stock market crash, and all the consequences thereof.
Do you know what a hospital pass is, John?
I do indeed.
Yeah, that's what it all feels like to me. I don't know if I would want to be president for the next 4 years. It feels like, just to be clear, a hospital pass is when you throw the ball to someone in rugby and they catch it, even though they know the moment they get their hands on the ball, they're going to get flattened. But of course, you've got no choice at that point. The pass has been thrown. Hence, it feels like this election is very much a hospital pass. Whoever catches the ball next month in the presidential election will be absolutely flattened by all sorts of awkward trends and terrifying possibilities. I feel like the UK is one of the less exposed countries to most of this. I think it's very financialized, but it doesn't have the trade issues that Europe, China, and the US does. Certainly not in terms of industrial goods and all that sort of thing. Does that give you more comfort about UK stocks, or are you quite worried about the UK in this emerging trade war story?
The UK is a small open economy that basically imports global economic conditions. So if anything is going to be negative globally, it's also going to be negative for the UK. There's no escaping that. However, one interesting feature of the UK stock market when it comes to the large caps, that is the FTSE 100, is that in comparison to the US stock market, for example, it's a relatively defensive mix of companies. Sure, you have some high risk stuff in there. You have some discretionary stuff in there, but you have a lot of basic industries. You have a lot of natural resources. You have a lot of consumer staples. Basically, the FTSE 100 is simply a more defensive index by composition than the S&P 500 or the Dow Jones. And so in my opinion, the FTSE 100 actually can act as a safe haven for global investors who are worried about this sort of thing. So while it might be a net negative all around if we escalate into the next level of trade wars, the FTSE 100 actually could be regarded as a relative safe haven. And hence it might actually be a kind of a place where investors can at least try to hide as we go through that sort of period.
I just want to close with a quick reminder that the US election is obviously not the only thing going on here. All sorts of other things will be moving markets. So, beware of journalists writing headlines aligning Trump or Kamala stories with market moves. It's very difficult to untangle these things and to try and figure out and estimate how much of a bond market or stock market move really is attributable to what. And so even as the results unfold over the next few weeks in the Congress, the Senate, and also the presidency, I think we need to be a bit wary about trying to blame anyone for what occurs, as much fun as it may be. John, thanks very much for joining us, and to everyone at home, thanks for watching.
Yeah, my pleasure, Nick.